Hello friends, welcome to Mind Money Muscle YouTube channel. To grow smarter, richer and stronger, just hit that subscribe button. Today's theme is money. In the last video, I have explained you pump and dump technique, what some manipulators do. And one of the subscriber commented that to show an example for pump and dump technique. Technically, I can't show here a particular stock whether it is happened or not because it is not visible. But I will show you some stocks where you can see such a pattern. So you can compare yourself those stocks and the stocks fundamentals, how they are different from the stocks you get from the screens, which I have suggested in the last video. Okay, let's go to the charts. So here it's showing short term mildly negative, long term negative. See, especially you need to check the market cap. 2000 crore means it's a small cap company. What I have suggested for the market cap? 20,000 crore. 20,000 crores is the market cap we are suggesting to invest. So 15, you can consider even 15,000 to 20,000 crores. Okay guys, let's see the J Corporation companies overview. Here we can see the market values. We don't need to check, no need to check about it. This is PE ratio. It's 30. And generally we consider PE ratio between 7 to 20. So PE ratio is high. And the major thing is market cap, 2000 crores. So when market cap is low, it is easy to manipulate the price action by investing few hundred crore. Okay, here you can see the shareholding pattern. Promoters have 73%, public have 23%, FIIs, mutual funds, insurance companies and other DIs. So shareholding pattern wise it is good, but market capitalization only we need to check because it might be the small cap, but I'm not saying there is some pump and dump manipulation technique was done here, but I will show you chart. See, when you see 1 hour candle, you can't understand, but when we keep it to the 1 day candle, you can see a sharp fall in the market. So it is sell off. To understand it more clear, I am keeping it for weekly candles. If you see here on 13th March, the price of this stock, particular stock is 118 and it went all the way to 416. So after the consolidation, you can see a sharp fall within a few days. So this kind of sell-off is the danger. So here they pump the price from 118 to 400 and they dump the price from 387 to 91. So this is one example. So if you don't understand this pump and dump technique, you may fall in the trap of entering in the high price and then sudden profit. After sudden profit booking, you will end up with the loss. So it will kill the motivation to invest more and learn more. So before investing, if you learn these techniques, okay, if price is going high, where to enter and where to exit, how I can know? So to know where to enter and where to exit, these are the technical indicators which I follow. RSI and MACD. These are the two technical indicators I follow. I will explain more in detail. Let's go to the presentation. Now I hope that you guys understand. Now I hope that you guys understood that pump and dump scheme as well as supply demand rule. So it is really important where you enter and where you exit. If you enter here and exit here, you will end up with the profit. And if you enter here and if you exit here, you will end up with the loss. So enter your investment is depends on the entry and exit. Right time to enter, right time to exit is very important in the stock market. Okay. because even though you got some good stocks from the screener and you checked all the fundamentals, but you enter in the wrong time at highest valuation, obviously the people over there, they book the profit and that price will go down. Ultimately, you will end up with the loss. So it is necessary to understand where to enter and where to exit. To know this entry and exit, we have two indicators. One is RSI and MACD, relative strength index. So to understand entry and exit, these are the indicators. Every stockbroking company provides you these indicators. So here you can see RSI. This measures the momentum of a particular stock. Here you can see overbought is greater than 70, oversold is less than 30. What is overbought and what is oversold? So what is overbought? Means people already purchased a huge volumes in this particular stock. So they going to sell after this. So they're going to sell means they're going to book the profit at the top. So once they book the profit, means they sell all the holdings. So supply will increase in the market. So its value will come down. In the same way, oversold. So when it oversold, the price of the particular stock will come to the lowest value, means attractive value. So there people start buying because of the valuation. Means you are getting a particular stock at the lowest price below 30. So you can buy here. Just follow the relative strength index, buy at the bottom, sell at the top. Easy, right? So relative strength index. What about MACD? This is a momentum indicator. Both are momentum indicators. How we can see, we can use RSI and MACD together to minimize the risk and to maximize the profit. So for that, we need to understand what is MACD. So here in the MACD, we have two things we can understand. One is bullish crossover. MACD line crosses above the signal line, and bearish crossover. MACD line crosses below the signal line. Here you can see MACD signal line. This green line is a MACD line and red line is the signal line. See here we'll see when this MACD line crossing this signal line towards the top. So it is a bullish crossover. Similarly, when this MACD line crosses the signal line to the bottom, this is a bearish crossover. And you can see the histogram here. This will indicate the volumes. By the color, thickness and the height, you can see, you can assume that there are more volumes. So it will continue the bullish. It continues the bullish trend, or it going to change its trend. So I will explain you clearly with in my Angel One account. Let's take any one good stock. I'll take Hindustan Unilever. Here you can see, guys, from the past to present, how it happened. See, as long as MACD and RSI are constant, so market also constant. But here you can see RSI touches 29.40. In a similar time, this MACD line cutting the signal line here. So this is bullish crossover. So when these two matches, RSI as well as MACD, you can see the clear bull run. And similarly, here you can see RSI crosses 70. It means overbought. So then the profit booking happened. Then again you can see clear sell-off. A perfect example we got in Hindustan Unilever. As RSI touches the bottom and RSI reaches the top. So this method mostly helpful for the short-term traders who look for the profit in 3 months like that. So again, if you see it again, RSI coming to the top bottom. If it reach again 30, you can invest here and you can wait for till the overbought range. Means until it cross the 70. So this is one good example. What is, if you want to see another stock, I will show you any good stock. Axis Bank. Axis Bank also you can see. Here you can see as soon as in a continuous fall, this touches the 30 means before 30 means at the 27 it reaches, so it is at the lowest level. Then the bull run started in a similar way. But here you can see this MACD line crossed here. So that difference is there. But if these two matches, that will be more safe, but still it is going in a good way on. Yes, guys, this is the way you can use RSI and MACD to make less risk and more profit from the market. Follow this safe entry plan and safe exit plan. Look for RSI less than 30 oversold plus MACD bullish crossover. And another thing, wait until this confirmation candle means wait the green candle to come for the entry because we don't know how much it going to fall even more. Entry after confirmation candle. Here confirmation candle means let's assume market is falling, that particular stock also falling, and you want to invest in that and it crossed the 30 RSI 30, so oversold, but we don't know it's even going to fall, it's going to fall more or it's going to go high. For that we need to wait for the confirmation. So it is kind of confirmation for you, so it changed the trend, bearish trend to it turns into bullish, so you can invest. And that trend you can see in the MACD bullish crossover also. So at the same time, you can see MACD line crossing the signal line. So it supports your entry. In a similar way, safe exit. When RSI greater than 70 overbought plus MACD bearish crossover. Means, let's say you purchased here and RSI went, MACD also went here and RSI also crossed the 170. And then you see the MACD line crossing the signal line from the top to bottom. So it means that price going to come down. This is called MACD bearish crossover. Our use trailing stop after MACD shows weakening trend. I will explain you in the next video how this trailing stop will work. So guys, I hope you understand how to use RSI and MACD for better investment. And for better understanding, you do the back testing by using these indicators in various stocks in the market and invest carefully after studying more about the stock and try to contact your financial advisor. Thank you.